What's happening, family? I hope everyone had a blessed weekend with their families and loved ones, and a great start to the week. So here we are. Next video. It took me a while to make a recap and breakdown video because, I was like crazy busy, scheduled everything at all once. But I decided to, take a break from trading, as in not trading this week, but rather the time I have, spare time, I would invest in making these recaps and breakdowns from the past 2 weeks. So it's been a while because I wanted to make them earlier, but didn't have the time. So this week I will try to make one video every day. So for the coming 4 days I will make and upload basically every session I took of EURUSD in the past 2 weeks. And I would like to start out with the first one today. And without further ado, I suggest we get started, right? And I will do it in 4 parts, right? I mean, yes, I can do all 4 sessions in one video, but I don't want to rush through the sessions because, as you all know, I like to go into details, right? So I would like to take the time and explain my thought processes with as much as detail possible as to why I took certain positions, and that way I won't rush through the session. So let me get the first session right screen in front of me. Where is it? Yes. All right. So here we have our EURUSD session, right? From April 28th, as I mentioned, from a while back. But at this point, right? So after I posted this idea within the community, right? I actually took that position right after a major inducement got liquidated, and this one took out obviously the previous one also here from the lower time frame, and I just went with it, right? Placed my risk limit order here, stop loss there, and I thought, we have internal bearish inducement here. I decided not to get out here, right? Eventually, well, that's from another session, but I already did a recap on that, and I posted the idea, both the results, outcome, everything, right? So basically from this point on, I started my next session, as in selling from this major inducement here, right? So after this position here hit TP, I basically set my alert here at inducement and just waited patiently. If it not gets triggered, well, then I will look later on to perhaps what price action is showing, right? So at this point, my inducement got triggered, right? So I was starting to pay attention at how price will react to this area and how it close, right? Because, excuse me, because this gray candle was not closed yet. So what I did was I was monitoring the price, and at this point, I noticed, okay, we have indeed take out the liquidity of our major inducement here, right? And this area, I mean, obviously it only wicked through and all the candles closed below it, right? So that was for me just not enough confirmation, right? Because we are on the lower time frame, 3 minutes, and I was waiting there for a candle to close below this one, Why this one? Because it was the candle that took out inducement, right? Basically this gray candle here, right? So that's why. And I was not focusing on this one because this here is basically internal, right? Because as we can see, price again took out the high from the lower time frame here, just like it did here, taking out the liquidity from the major structure on the higher time frame, right? So that's basically the logic behind it. And yeah, you see, price basically was reacting. So definitely I got interested. And now I noticed, okay, we do have a lot of rejection. And basically, I noticed I did not move this one to this one. But yeah, I mean, it can stay still there. The more conservative, because again, it was the candle that took out liquidity. This is internal, but nevertheless, it is still like structure-wise from the lower time frame also, right? So yeah, I guess you can still use this one for a more aggressive approach, right? But basically up to you. I'm just showing you what the possibilities could have been, right? But you know, me being me, at this point, I basically went with a very aggressive entry, right? For several, well, I think good reasons, right? Because now at this point, again, major inducement got liquidated by this candle. Now, price, instead of doing something like this, right? It came back. Instead of mitigating this wick, it did a liquidation of it, as we can see here. But every time it closed way below it, right? So to me, it rejected basically to go higher, right? That's why at this point, I saw this wick took out the previous wick here, indicating, okay, price may reverse at this point, right? So even though it was about to close with 2 seconds to go here, I basically based my entry on this previous gray candle, right? That took out again all the previous liquidity here after major inducement was liquidated, right? So yeah, I went with a very aggressive entry here, and sometimes, well, again, your risk can definitely be your reward, right? But at this point, I was definitely confident to do this because it happens at an extreme from the lower time frame after a major structure higher time frame got liquidated, right? So just following my plan. And yeah, at this point, you see the next candle opened and yeah, volume started to kick in. So definitely got triggered. And at this point, you know, when price was here, what I did was I basically, again, placed a identical order to this first position, right? As in a 2 for 2. And the reason why is now this black candle was about to close, you know, with 2 seconds to go below the most lowest candle after everything here got liquidated at the top, right? And then again, my entry would have been practically the same based on this gray candle that again took out all the liquidity to the left. So yeah, with that in mind, I was anticipating this, right? So that's why I placed a 2 for 2 with a limit order here and stop again the same. And as you can see, price came back to mitigate this gray candle that took out liquidity earlier to the left, right? And now again was pushing down. So yeah, second 2 for 2 also triggered. That's why I gave it another color, in this case purple. Now, and then price came again back. And now I noticed, well, okay, if the price does not continue higher, then it's not because buyers are stepping in, to perhaps push the price higher. But in my mind, I was rather thinking, okay, perhaps it's to mitigate this candle, while perhaps taking out this candle high, So price came here. And at this point, I thought, well, yeah, if price wanted to push higher, it's presumably would have done so, right? So somehow, to me, I saw this again as a opportunity to place a third identical order to my first one, right? 3 for 3. So meaning if the price goes down, my third position will be triggered. If not, and goes higher, then, first and second position will be stopped out. So let's see. And as you can see, yeah, price just before close, right? Push the price lower. So at this point, again, I changed the color, identifying now 3 identical positions running, right? Now, price again started to push lower. At this point, I placed a fourth sell position, right? Because before price closes below this low, basically, I feel more comfortable stacking positions at an extreme here. After our higher time frame liquidity is liquidated from our major structure, and our lower time frame shows us many, sweeps, rejections, everything, right? Candle-wise entries, etc. Right? So I feel more comfortable at, scaling in at these areas here instead of, in the middle of a movement like this here, right? Because in comparison with this at the top, this one is more, or perhaps less probability it will hit your TP, because price has technically every reason to go higher because we have engineered liquidity, let's say here, right? And then it may go down. So yeah, don't be surprised if you get stopped out here. You know the reason why, but you can also definitely look for a re-entry here, right? So that's why when I'm saying this is more decisional. You can still follow it by following your system. Nothing wrong with it, don't get me wrong, but this area here is a less higher probability than this area because it happens at an extreme, right? That's the major difference, so to say, because price technically has no reason to go higher at this point, if that makes sense, right? Now, why did I base my entry here? Good question. In the meantime, we all know those, structure-wise liquidity sweeps like these, right? Liquidity inducement, where most traders see this as their order block, is to me basically a smart money trap, because more often than not, price will react from that area and then, collect all the stop losses here, taking out what I am waiting for, inducement, liquidity, and then I will look at this area to short, right? To me, that makes more sense. But, just pointing out things to perhaps enhance everyone's perspective. Nothing wrong with that, right? Just do what you do. And if you have a winning approach, definitely don't change it. But, you can definitely look for ways to enhance it, right? If it benefits your style, of course. If not, just ignore what I said. But nevertheless, these structure-wise liquidation concepts we already know, right? As in a whole lot of formation of candles, impulsive move, right? Corrective move, impulsive move. And, and then the deep pullback, again, a candle-wise formation that takes out this candle-wise pullback here. Now, while we can utilize those liquidity sweep concepts for structure-wise liquidity areas, we can, especially when this happens at the top, after major inducement, everything is liquidated from a higher time frame major structure, right? Look at this. Impulsive move, corrective move, impulsive move, right? Candle-wise. So we can definitely see this as liquidity, right? If you connect the dots. And that's why I placed my fourth limit order here. Because I thought, well, if price comes back to take out this candle-wise valid pullback or candle-wise inducement, liquidity, right? This position will be triggered. If not, then I will just wait until perhaps something like this happens along the way, right? Either before or after, you know, perhaps creating here our internal change of character, right? So definitely always good to come up with a couple of, you know, scenarios to go with, right? If this, then that, otherwise so and so. And look, exactly to the pip, right? Price came and, well, I believe it did create a equal high first, but yeah. And the next candle, you see, it took out that gray doji candle here. That was practically your candle-wise pullback, as in liquidity, right? By just a pip, perhaps even less. And then again, volume started to kick in to the downside, right? So yeah, this fourth position being triggered at this point. Now I was getting interested because price was about to, you know, either retest or close, you know, below this structure-wise pullback, right? That happened before price kind of decelerated from bullish to bearish. Yeah, now I noticed, okay, a wick through, but a close above, right? So more often than not, that indicates to me, okay, if there is more liquidity, well, after this one, out this one, right? So I would say this could be perhaps the next one, right? So after seeing that liquidity sweep, if there is liquidity within this leg, so to say, right? Price more often than not comes and liquidates that area also, just like how it did here, right? So with that in mind, yeah, that's why I placed my fifth position here based on this pullback, right? It may look like a inside bar. Well, this here definitely was, but if one look close enough, it definitely took out the high of the black candle, right? Before pushing down, right? So after seeing this candle forming with 3 seconds left on the clock, right? I just went and placed my fifth sell limit order here. Well, eventually price did unfortunately not pull back enough to trigger that position, but that's okay, right? I'm still waiting because price is still moving. It still may happen, right? So at this point, I thought, okay, if price now closes below this candle, where it is here, right? It still may come back either to take out this now internal created liquidity here, or it may still go here, this being our, well, technically not engineered liquidity because that one is here, right? But I mean within this leg, so to say, right here, I mean this single leg, if this here is your internal structure, after again, you know, here liquidity got taken out, liquidation mitigation, everything at the extreme area. These are kind of, you know, the only 2 points I will focus on at this point. And as you can see, well, price had no intention, right, in coming back to that area. And at this point, I started to notice something interesting, because now price definitely had also closed here, right? below. So that was also a good sign that perhaps, you know, it continues the shift in market structure, or, you know, internal change of character here. And then now kind of, you know, from a structure-wise point, but the actual one is here, to be honest, right? From basically this move, right? So up until this point, this may act still as inducement, or price fails, does something like this, and then, you know, it will be a BOS, right? Instead of a change of character. I hope that makes sense. Yeah, but nevertheless, at this point, look, I started to notice something interesting here happening, but, you know, looking at the time, market was about to close. I was just marking out things just to keep an eye on it. And I noticed here like very minor micro internal inducement that was just being liquidated at this point. And I was just, you know, following and watching and just doing my thing. I noticed, okay, yeah, let's go back. Not too quick. Yeah, at this point, look, the reason why I noticed, okay, this could be, you know, an area that could be interesting is because here I noticed that smart money trap, right, for buyers. Why? Because imagine how many traders saw this as a BOS, perhaps this as a BOS, perhaps this one, and perhaps even this one, all to the upside, right? And, you know, I thought perhaps they may see this as a potential order block to buy from, right? That's why after that I had marked out the smart money trap with this red colored rectangle, and at this point I noticed, okay, price is definitely going higher after taking out inducement with this gravestone doji here, right? The wick can obviously be seen just before this little black candle, right? Yeah, so here I marked also my internal inducement of this micro internal structure, so to say. But I was looking at, okay, since it was this gray colored gravestone doji that took out the inducement, I was waiting, okay, let's see if price closes below that candle, right? Otherwise, I will not be interested in looking at positions here. Why? Because remember, now would this happen at the top, just like it did? Why was I confident to do it here? Well, obviously, I named all the reasons, and if you missed them, you can just scroll back a bit and listen to them again. But basically, because this is already in the middle of a move and its internal structure, and, you know, nevertheless, I thought it still will be interesting if something like this happens. Perhaps this could happen, because I know most traders who bought at this place, right, have all their stop losses collected here. So price eventually, after doing this, may target everyone's stop loss, right? But, you know, this being the market, no one actually knows what will happen. That's why we react and don't anticipate. Now, at this point, as you can see, the price came very close to just, you know, take out the low, not even close below it, but it did not, right? So at this point, I definitely was not interested. And then I noticed, okay, we have also a like minor unmitigated, you know, order flow at this point, right? From the 3 minute, because this here was the last attempt to push the price higher, right? I mean, the one before that already got mitigated here. Yes. And the one before that, this push here, also got mitigated by this move, right? That's why I was focusing on, well, perhaps this order flow unmitigated. in this move down, right? After everything here happens, both mitigation and liquidation from the higher time frame major structure. So yeah, definitely it could be possible or not. That's why we, watch, monitor, and come up with a couple of scenarios. Now, at this point, okay, look, this candle had, with 1 minute to go, pretty much, volume, but with just 3 seconds to go, it already lost some of that volume, right? And was about to be ending up a doji, gravestone doji, right? So I thought, yeah, if this should happen, I will, definitely be interested in looking shorts from this area just by following my system, even though I know this is a calculated position, again, because it happens within the middle of a move. Not only that, but because we have also still liquidity here, those areas, remember? So price technically has every reason to go higher. Here, at this point, it did not have technically any reason to go higher. That's why it works here a higher probability in comparison with this one, right? So this was basically my first scenario that I would have liked to see to happen before even considering to participate calculated positions after this. Or I was looking for something like this perhaps, right? Now the liquidation happens, price comes here and creates mitigation. And then I will look for the candle that mitigated this one before continuing down, right? If it also kind of retests or mitigates the extreme from being that candle that did the mitigation here, if that makes sense, then I will look for sells here. If not, I will just wait patiently because, again, those liquidity areas that I mentioned earlier. So I waited, and then I noticed, okay, a wick through. Now again, I would have looked preferably for a close, indicating yes, it is perhaps ready to go down. Because at this point, it's just a liquidity sweep, indicating that yes, it may instead go higher, right? Because of those liquidity areas, remember? But yeah, we are just following price action and reacting to it. Yeah, so at this point, because, this low replaced this low when it comes to making a lower low, right? So to say, I was now focusing on a candle close below this one, not this one, right? So if this candle closes at where it is now, yes, it closed below this one, but that one does not matter anymore because this low replaced that low, so we should focus on a close below that new low. Yes? So I waited, and then it indeed happened. Now at this point I thought, well, I am going to make that calculated position, right? As in risk limit order. Now what I did was basically the same principle as how I entered my fourth position here. Remember? With that candle-wise impulsive push, candle-wise valid pullback, candle-wise impulsive push, which then would have given me my micro, structure-wise inducement here. Remember? And that one got triggered, and then basically I was looking at the same here, because now here inducement got taken out, all the stop losses collected here, remember? Now we had a sweep, basically it's very minor, but we had a sweep, right? Now the price closed also below this candle here, so what I saw was basically, again, this. You see this very little gray candle after this black dragonfly doji here, right? So what I was seeing was practically this, again, the same as here earlier, right? But in my mind, I already knew this is a calculated position. So yes, it may trigger me, give a reaction, and it may stop me out, right? Because it still has liquidity on the upside. Technically, it has every reason to go higher. But, you know, if not, then hurrah for me, right? That's basically the idea behind a calculated position, right? Because I know if I do get stopped out, I can presumably get a better entry, you know, at this point or this point. Because if it stops me out here, right, this becomes a smart money trap by fact, right? Because it was not, you know, retested like this before giving any sell signals after that. Then it would have been a entry type, right? But no, that was not given. That's why I was focusing on a close below this that happened after liquidity taken out here. So liquidity should be always your main focus. Mitigation, if it happens, is just an added bonus, as in confluence, right? So yeah, at this point, I basically based my entry on that candle-wise pullback here, right? And just went for it. And as you can see, price came, it triggered my position, and then it gave a reaction. Well, and at this point, you know, price was, at least my time, between 2300 hours and midnight, the spreads start to you know, grow, right, on EURUSD during those times. But the other 23 hours of the day, basically my spread is 0.0, right, on EURUSD, using my IC markets as broker. So at this point, I was not considering about to close my positions just with 3 minutes to go, because I, you know, my stop loss was big enough where from prices now to avoid to getting stopped out, right? Because during the night, even though with big spreads, I mean, the most that I encountered was like 4R, I believe. And, you know, this being 6R and this being, you know, 4R, basically I had 10R of headspace before getting stopped out, so to say, right? So I just left my position open at that point. And yeah, basically, yeah, it closed. But as you can see, we jumped from April 28th to April 30th. Right, because it's basically the weekend, right? So and this was a Friday evening, just before the market closed, with 3 minutes to go, right? And this is basically on the Monday, or sorry, yeah, Monday. Huh? Yeah, indeed. Now I'm oh no, wait a minute, this is Sunday, sorry, before the market opened, right? So I took a screenshot just to add those also to my journal, right? Because I journal everything. And yeah, this is basically where the market opened, 8 minutes after it opened, after 2300 hours on Sunday. So basically I got stopped out my position. I mean, it happens, and I already knew that in anticipation. Now, why again did it not work here, while it worked perfectly to the T here? Again, middle of a move, price has technically every reason to go higher. It does not always, obviously, but if it does, we know why, right? We have liquidity here still. right? And this now has become a smart money trap. Don't get confused, because here, right, price kind of tapped in here, and I think, eventually price should have done something like this. So I was waiting, right? After being stopped out, I just, took a screenshot again to journal, document everything. And at this point, I was curious about what price will do, right? At this point, those who had their pending orders waiting here are now triggered. And yeah, basically at this point, I thought, okay, let me have a look if the SOL strategy is going to play out, right? Those who know me, SOL strategy is basically, when a order flow, POI, whatever, gets retested, not mitigated, right? Because this here, I do not consider a mitigation. Technically, it is a mitigation, quote unquote, but to me, this wick through or in, but close outside, is basically a retest. This here is now an actual mitigation, right? And that's basically the SOL strategy in short, right? It comes out, it takes out that, candle that quote unquote mitigated earlier, but again, retested that area. While doing so, it closes within. Now, if the price then rejects to go higher after this point, like that, right? I will definitely be interested in looking, for shorts after that point, right? Because now all the stop losses are collected here after liquidity was already taken out, right? But again, still with this in mind, right? Because to me, still somehow this acts as a smart money trap. So yeah, let's see what happens at this point. Yeah, and it was around this time I decided, to hell with the smart money trap, right? Because if now I get any signal that price wants to go lower, I will just follow my system, right? So let's see. I believe it was around this area. Yeah. So just before Asian session opened, I noticed, this was in between, right? That's why I placed my stop order after seeing this. Right, so price basically, none of the gray candles basically took out the previous black candle. This was the only one, I believe, here, but every time it's kind of, pushed back, right? Ending up with almost no volume. And after seeing this, I definitely got interested because this here, all the stop losses that are collected, right? Because perhaps I may have been a victim here of liquidity. Well, it happens, right? But I can definitely profit from this liquidity being targeted now, right? If price does that. Yes, because again, our position aligns with our higher time frame continuation or impulsive move, whereas this was our corrective move and this was the previous impulsive move, right? So at this point, I again got triggered, and at this point, I again placed a 2 for 2 based on this one. And now price came back and triggered also this identical 2 for 2 position via a sell limit. Now price tapped me in. Now, why did I place it here at this point? Because at this candle close, I got now confirmation of my SOL strategy earlier here. so. Whereas this could have acted as a smart money trap before, is now practically being respected, right? If that makes sense, because of the soul, right? This one took out this one while closing within, and then eventually price this here closed below this candle that did the liquidation within our order flow. So yeah, that's why I had entered here at this point, right? And now price was again a bit going up and down, and I believe it was at this point. Yeah. Why did I place again? Because here price went down, right? And eventually it came back. And whereas before the candle body was mitigated, right, by retesting every time my entry very tightly, right? Now I noticed, okay, this wick is now retested, right? And again, our candle-wise, well, basically it was one candle that did already the liquidation immediately within one candle before again doing this, right? So that's why I was not waiting for any liquidation concept to happen, but rather again going for that mitigation, because the candle-wise micro internal liquidation here already got liquidated by this candle earlier, right? Before closing here. Here, right? Where then price now comes back to mitigate this one. Now, most of my mentees already know what kind of entry type that would have been. So at this point, that's why I again placed a identical order to these already two identical running positions, right? And yeah, as you can see, price again went down, triggering my third position of this, well, previous two, right? And then now price again came back. And again, I placed my fourth identical position, right? Because after I noticed, okay, it had no intention of going higher at that point. Again, what everything happened before here. Yeah, so that's why I was confident enough. Okay, I'm going to place my fourth position from this area here. And that one eventually got triggered, as you can see. That's why I again changed the color to orange, right? As in 4 positions. Yeah, and then, you know, price went lower, as you can see. And at this point I noticed, yeah, it definitely may, you know, or may not. Obviously, nothing is 100% sure, but in my mind, it may at least target this one. Right, so because I had made my entries here in the middle of move, I thought, okay, if price reaches this area, I could consider closing all 4 positions of this one instead of targeting also here. That way, at least I can guarantee some profits, right? And by the way, all these positions were taking with a percentage-based risk from my total account balance, right? Because usually, those who know me, I always, enter with only €25 risk per trade. Doesn't matter how big my stop loss is, right? It's just a fixed based risk. But yeah. Lately, more often than not, I am willing to take more and more those percentage-based risks. So yeah, I mean, it definitely compounds my account in a positive way once you have mastered these concepts. So yeah, at this point, I went again with the same principle as I did here with the fourth position, and this one also, but where it failed here, it should now point, and basically this one still, but as I mentioned earlier, I will look for entry criteria at this point. However, if I do not get any entry criteria, right, price still may, perhaps the liquidity may be liquidated, right? I was just waiting, set my alert at that point, and then I looked later, and now I noticed this, right? Now, why does this happen then? Well, look at this, pink, right? Because they see this as a breakout structure, right? This as the zone that broke structure, as in where the strength came from to confirm this BOS, right? So that's why they come here. They get a reaction, but so let's see what will happen after that, right? Pushback, right? After everyone presumably got triggered too early or aggressive from that area. Now, it came back, but did not stop them out, obviously, right? And as you can see, it's... Now, why do I mention this? Because imagine how many supply traders are looking now for entry here, right? Because 1, 2, 3, 4, 5 times retested, well, obviously more, but every time it rejected to go higher, right? So imagine everyone entering from that area, and where will you think everyone will put their stop loss? Well, just above here or above this one. I think we can fairly agree on that, right? Just to be honest, because, you know, the very aggressive ones who would like to maximize their rewards will place them here, but those who are a bit more conservative and will give it a headroom, they will place it here, right? So those who place it here still may have a chance to stay in their positions, unless, of course, price not only takes out this here inducement, but also, again, mitigates this one, or even liquidates that one, right? So at that point, we're just watching, right? Patiently to see what will happen. Okay. Now, I know this here, right? Still with a minute 15, or sorry, minute 16 to go. Nevertheless, I was watching it, right? So let's go to the next slide. Yeah, and now at this point, with only 7 seconds to go, I thought, well, now look, price indeed is about to close below that low I mentioned earlier here, that could act as our potential bullish inducement, right? So at this point, it can get a bit of tricky, right? Because should we now look for buys, or should we continue sells, right? Well, looking at the bigger picture, I mean, yes, this may be bullish inducement, right? But looking at the bigger picture, right, this was our corrective move, as in retracement, and this here was our higher time frame major structure impulsive move, right? So yes, if we do see any action happening from around this area, we can consider a buy for the short term as a counter trade position, because we know, okay, if price should continue down, it should first take out liquidity because it needs its fuel, right? And then it will continue down like this, right? So we can definitely look at this well, internal bullish inducement, right? From this single pullback move. If price comes back here, we can look for sell to continue our 1, 2, 3, 4, 5, 6, 7, 8, 9, and perhaps 10th position, right? This one minus R, this one not being triggered, right? So definitely interesting, but I must say honestly, those counter trade positions are, lower probability when it comes to hitting your TP, because you are trading against the current major bias or your higher time frame continuation or impulsive move after a corrective or retracement move, right? Because we don't know if price will hit that area like that. It may as well go for this one and continue lower at that point, right? So if you enter here with, let's say, I don't know, stop here, and you target here as your TP, you may get stopped out quicker than when you look for a sell at this position here, because again, you are trading with the pro trend, while here you're trying to trade against your pro trend, catching a short-term counter position. And yeah, sometimes it definitely may work, right? But I'm just showing out that it may take out this one and then eventually stop you out and continue the, pro trend, right? So you have to keep that in mind. Now let's continue. Right, now as you can see, I moved this inducement in the next screenshot to here, right? And this one is now my engineered liquidity. So again, the reason why I am not focusing on this one is because the liquidity bet, right? And also because, well, to me, it basically now looked something like this, right? As in most recent internal pullback inducement, the first one, engineered liquidity, everything in between, smart money trap, right? Now price came back, took out that internal inducement here, right? I waited because the candle that did the liquidation, it was not taken out, or price did not close below it, right? But instead it went higher. But now I was noticing it was definitely reacting from this area, right? Being as a smart money trap, as I mentioned earlier. But, nevertheless, I was still looking at the possible scenarios that could have happened, because if price, manipulates traders here, eventually it has to stop them out here. While doing so, it may as well go for that engineered liquidity, right? So, yeah, with that in mind, I was just watching. Yeah, and now I have drawn this line here because that was basically the candle low of the candle that, well, basically mitigated, because even though very minor, it closed within that smart money trap, right? So, yeah, I thought, well, if, price closes the next candle something like this, right, I could consider to take a entry here still, perhaps, right? Because again, then price would have given me a entry type, right? Both liquidation and mitigation. But again, it will be not as higher probability here in the middle of a move, especially when there is still a higher value liquidity sitting here, namely our engineered liquidity, right? Whereas these are decisional, these are higher probability, but the highest probabilities are always our major or higher time frame inducement like these, as you can see here, right? If it gets liquidated, lower time frame, structure-wise and or candle-wise, liquidation, mitigation, everything at an extreme, well, you can definitely catch some nice trades at these areas here and stack them basically at an extreme area. But you have to know what to look for, right? Otherwise, you will enter everywhere, be all over the place, and don't be like that. Just enter only if structure shows you a logical and mechanical, so to say, area where either liquidation and or mitigation has to happen, right? Preferably in conjunction with our higher time frame major structure, right? Otherwise, be careful. So at this point, right, I thought, okay, even though smart money trap, right, now liquidity was created and taken out. So I was thinking, okay, if now the candle closes below this one, I could, consider this as a entry type and watch if price then will give a entry criteria candle-wise here. After structure-wise, an entry type is given. Otherwise, I will wait until engineered liquidity is taken out, right? So, you see, at this point, price came back. I moved my position tool a bit to the left. Now look at this, the gray candle, right? It showed as if it was a gravestone doji or pin bar, however you want to call it, right? But look, it came, it created a equal low, and then it pushed higher. So at this point, I was still not interested in looking for any shorts at this point, right? Because if price had done this, I would have considered to perhaps take a position based on that black candle, right? Because now liquidation, mitigation, candle-wise confirmation, right? Yeah, I definitely would consider that still in mind that it is still in mind that it is a decisional position, right? As in calculated. Now, as you can see, now this smart money trap definitely worked out, because even though the entry type was given structure-wise, our candle-wise confirmation to actually place our entry was not given, right? That's why if you are patient and are willing to be disciplined and not rush into, positions, you would have avoided a loss at this point. And now that this inducement is liquidated and this smart money trap collected all the money, a price can do two things. Either it has to close below this one, and then that whole area can act as your entry, right? Like that. Yeah. If that does not happen, if price does this, then it's a very high probability that it will aim for that engineered liquidity, because remember, we still have a equal high, well, a bed of liquidity here where everyone had their stop losses, right? Or there or here. So yeah, definitely interesting price action. Okay, yeah. And this was the point where I actually drew it out on the chart, right? Because this is scenario one, what I would have liked to see, right? As I showed you earlier. Or I would have liked to see something like this, right? So either a liquidation mitigation after this is a confirmed change of character, internal, right? Or either a change of character, internal, confirmed with only a liquidation here, and then perhaps a mitigation at the top, right? So those were basically the ideas I was looking for. And as you can see, none of them played out, but that's fine, because I already anticipated this. These scenarios are only to prepare myself to look for shorts at this point, if either this or this happens. If not, again, like I said, I will focus on this area because of all the liquidity and the stop losses here and here, right? And eventually, when price, went higher, I definitely was patient. And now I got an alert, right, that my engineered liquidity was triggered at this point. And now I also noticed, now that liquidity is taken out here, this kind of last push to the upside is also mitigated from the looks of it, right? I was waiting for a structure-wise valid pullback here for this to happen, right? And then I can perhaps utilize again this whole area where price then does something like this, right? So basically I was waiting for that, and what I did was I set my alert at this point because I got a call, emergency call, and I had to leave. Unfortunately, I was at this point not able to monitor the price any longer. And also what I did is, because I had to go away, I moved the stop loss to break even from this one position, but also the stop loss to break even of all these 4 positions, right? Just in case, because technically price could react from that area, right? But if not, then I will not suffer 5R loss from 4 positions here and 1 position here, right? So yeah, at this point, I was no longer behind the charts until I came back. Yeah, and as you can see, right, what was the time when I left? Like 1300 hours. And when I came back, like almost 4 hours later, I noticed, so indeed, price did not give the desired setup like this. So we can short from here, right? It even went higher. It stopped out, well, at break even. At least, right? Me here with these ones, and also here with these ones, right? And look at this. Price just, oh my God. I mean, when I saw that, I thought, well, it happens, man. I mean, you know, we can cry about it, right? That it missed it just by a pip or so. But I mean, it is what it is. I was glad that I did not take any losses here and here. And also keep in mind, I still had 1, 2, 3, and this one 4 running positions, right? So definitely not a bad session, even though I got stopped out of 5 positions at break even and missed one here. I mean, yeah, you gotta love it, you know. It's a bit of a psychological game we are playing, and yeah, sometimes you know, we lose, sometimes we win, but either way, you should have fun while doing so. And yeah, at this point, I indeed marked this one out, like missed entry of 5 position, literally 1 pip or so. But, you know, at that point, I noticed, well, price is very close to my target, right? I was considering getting out early at this point because price was now mitigating this wick, right? That took out earlier major bullish endorsement here, but also this candle wick here, right? So at that point, you have to make a decision or a choice. Either, you know, you get out early, and in this case, I did not, because I noticed definitely still, you know, liquidity all over the place, like here. So I was not afraid if, you know, price pulls back for the short term, like that. I would then look for a pinnacle point after either liquidation and or perhaps even mitigation, to look for a scale in, right? So I waited, did not get out of my positions, right? And at this point, yeah, I mean, it was like 21:45, but still, I decided, you know what, let's call it a day, and I will let my positions run. And, you know, the next day, during the London session, as you can see, price eventually hit my TP, right? I mean, I got out with 1 and then 4 over here, so with 5 break evens, 1 R loss, 1 untriggered position, and 3 times 15 R, so 45, and 1 time 11 R. So basically I ended this session with 65, right, R. And again, these were all, you know, percentage based risk. So I definitely profited very well from this particular session, even though 1 loss. It's all part of the game. You can't catch them all. Sometimes you miss out, sometimes you lose, sometimes, well, hopefully more often than not, you win. And you can do so as long as you are disciplined and patient, right? And you have a systematic approach to the market, just like I showed you right now. So yeah, that's basically the end of the session already, I think. Let's see. Yeah. So this was the last screenshot, and it ended on May 2nd at 1 minute past 11. Well, basically earlier, but it was this time I took a screenshot because I was having my private coachings and could not immediately took screenshots at the place. Yeah, family, so I will round this video up, bring it to an end, and as promised, I will try to make every day in the coming 3 days, the next 3 sessions, also a video with all the recaps and breakdowns, details, everything. So definitely something good to look forward to. I hope you enjoyed this video, and if you did, please leave a like.